It's a network in which the depositors really get most of the benefit. We represent risk over my needs, cryptocurrency, Celsius network. Come on down with the experts, show you how to invest, collect up on the interest.
All right, guys, if you haven't heard the Celsius anthem, I posted it on Twitter, and Zach will edit a link in the chat here as well. Lefty Hooks killing it with a mix from the hood. So freestyle, Lefty, go. You keep improving this, the Celsius anthem. So I have a special guest today. My oldest son, David Mashinsky, is a hodler, has been with Celsius since the beginning. And so I decided to have him join us. He has a much cooler shirt than me. He's always cooler than his dad, make me look bad. As always, we have Zach back with us, who's gonna be feeding your questions. So let's dive into it. Thanks for joining. I just finished an AMA and a presentation with Chainlink. If you missed it, I'll break the news. We went live, I think yesterday, with the Chainlink Oracle. So we're actually using it in the pricing live. And as you know, we have Chainlink in the wallet. You can earn as high as 6.13%, the highest rate in the industry if you're earning in sell, and I think 4.5% if you're earning in kind. So the rewards just keep rewarding, right? I mean, we're killing it with all the different things. So a very long list of things to talk about today. I want to start with just talking about the Fed. If you missed some of my tweets, not very happy with the Fed. I'm fed up with the Fed. David always shakes his head when I plug these in, but let's dig into what's actually happening there. So again, the Federal Reserve has printed more new money in 6 months than it did in 100 years, right? And these are the guys that are supposed to sit on our treasury and keep it tight and get interest rates to stay low and get unemployment to stay low. Now they're out of control. I mean, when the head of the Fed is telling you inflation is good for you, you know that he's lying, right? I mean, we all know that inflation is bad for you. Every day you go to sleep and you wake up, your money is worth less, not more, right? There's a video we put on YouTube that kind of explains that. If you haven't watched it, go watch it. You'll understand the detail. But the main thing is that the Fed now is no longer protecting for unemployment or protecting for low inflation. Now they are making sure that the bubble does not burst. Now, at the end of 2019, right? So just less than a year ago, there was an earthquake in the financial market. Most of you haven't felt it because you don't have your hand on the pulse every day. But basically, the repo market or the repurchase market, okay, no one knows. It's a very antiquated, specialized thing where banks sell or repurchase obligations from each other. That whole market froze, meaning no bank trusted another bank, right? And the Fed had to jump in with 600 billion with a B, $600 billion worth of liquidity. So the 2008 bailout was 800 billion. Here, like this, the Fed just flooded the markets with 600 billion. And watch my posts from back then. I told you back then in November and in December that an earthquake, a 7 Richter magnitude earthquake just took place. So before Corona, before everything else, we already knew that there was a huge problem, right? And the problem is the debt bubble that is on our shoulders. $270 trillion worth of global debt, most of it is dollar denominated, is being called on, right? Investors are very worried, they're shaking, banks don't trust each other, and then Corona comes and pops the bubble on top of that, right? That's why the Fed had to do crazy stuff that it has not done in 100 years, right? So the music slowed down in end of 2019, and then the music stopped when Corona hit the United States, the largest economy in the world, right? So when the music stopped, the Fed had to do something. So what did they do? They jumped in and they said, whatever it takes. When the Federal Reserve Chairman tells you whatever it takes, that is not good for you. That is good for them. Okay, and you have to think for yourself, what is good for me? What is good for them? So they did save the US economy, right? Treasury and the Fed went in and printed all this money and sent everybody checks. And most of you guys went on Robinhood and bought Amazon and Apple, and you feel great about it, right? But that's not gonna last for long, because the increase in price in Apple, increase in price in Amazon is the inflation of all this new money coming in. The price of Apple, the value of Apple didn't change. It's just the dollars that you own have decreased in value. You need more of the same dollars to own one share of Apple or own one share of Amazon. So you need to be very careful about that. Again, as the music slows down or stops, that is usually means catastrophic things are ahead of us. That giant storm that's coming is still coming, and it's going to hit us very, very hard in the form of a deep recession or a depression with the community. So these are things that you need to pay attention to. Again, our recommendation, again, I'm not your financial advisor, I'm just telling you what I'm doing, is that you need to put more of your assets in non-correlated areas. So for example, you need to buy more gold, you need to buy more Bitcoin, Ethereum, things that are not connected to the US dollar. When you're buying Apple or Amazon or Tesla, and Tesla is worth more, I think, than all the other car companies put together, okay? Mm-hmm. So that is not a good thing, okay? That is a very high risk thing. So you need to decide, okay, 10, 20% of my entire allocation is gonna go to stuff that no matter what happens will stick around, okay? So that's an important message. The other side of it is that many people come to me and say, oh, you know, Bitcoin is 11 years old, I'm too late to the game, or they tell me, oh, sell token is at 40 cents, it's too late, I'm not gonna buy any. In crypto terms, you are not the 99%, you're the 1%. And why is that? Because you're still early to the game. There are 7.5 billion people on this planet. Only 45 million or so of them know anything about crypto. David is in the know, right? Zach is in the know. But most of the people in the world, young or old, have no clue what we're talking about. They can watch this entire man and they will not understand one word that we're talking about. And they'll be like, what? You guys are talking about some imaginary coins that are running on some blockchain? What are you talking about? So, but in crypto terms, you are part of the 1%, right? You are in the beginning of the game. And this game is not stacked against you like the casino in Vegas, or like the stock market in which the guys that win are the guys in the know, right? Here, everybody gets the same chance. Everybody gets the same opportunity. And you know, and again, it doesn't matter if you're old or young. I mean, David, I think I didn't tell you to do it, right? You put most of your stuff in Cell. How long ago? When did you put your money in Cell?
I got it when it was at like 18 cents. So.
Got in the game early.
Are you selling or are you hodling? What are you doing?
I've been hodling.
So the point is that like every person has to make their own decision and decide what they're going for and so on. But you have to think in your head that you're part of the 1%. You're going to do much better if you think that you're part of the 99%. So
yeah, something that listening to Powell talk yesterday, he was saying inflation like it's this great thing, like, oh, we need more inflation, it's going to get the economy going, it's fantastic, we need this. And people forgot the time of the 70s where everyone would go and get their paycheck and know that they're losing buying power. They're not able to buy as many groceries anymore because the government is creating all this money, and now it's celebrated as a good thing. It's insane.
Well, he can't. What is he going to go out and tell you it's a horrible thing and you should leave the United States of America? So you have to care for your own family. You have to care for yourself, and to do that, you have to have non-correlated assets, right? That's how you protect yourself from this mountain of inflation that's coming your way. All right, so we talked about Chainlink. Again, I'm very excited about it. There's an interview with me and Sergey. If you haven't watched it, the CEO and co-founder of Chainlink, go to the YouTube channel. It's one of the MOIP shows, one of the first actually that we ever did. So dig it up, and again, Zach will put a link for you to make it easier for you to find it. So what else do we have? So I want to talk about two things that Celsius contributed to DeFi that most people don't know. When you look at Celsius, you think, oh, Celsius is CeFi, Celsius is centralized. Not at all. Celsius invented this whole concept of interest income. Dig it up. Find me another company that did interest income by you deposit something and you earn interest, right? In kind, the same thing, right? You deposit Bitcoin, you earn Bitcoin. You deposit Ethereum, you earn Ethereum. You didn't have to do anything. Find me another company that did that. So by creating that, that became now, everybody realized, oh my God, this is amazing. Let's do that. Compound, switch from Compound version 1.0. Compound 2.0 was a copy of Celsius, right? BlockFi 2.0 was a copy of Celsius, and so on, so on, so on. So now I always invite everybody to copy Celsius. I'm not saying, hey, we invented it, stop copying us. That's not what I'm saying. What I'm saying is that when you think of yield and interest income and farming and all that stuff, the guys that invented it and built the best model. No one has yet copied our model where we give you 80% of what we make has been Celsius. Now, Celsius created another thing, which is a huge contribution to crypto and to DeFi, which is Celsius was the first ever. And again, if you think I'm wrong, find me another model that did that. Celsius was the first that said, not just that you're going to earn interest, but you can, instead of earning in kind or get the rewards in kind, you can get it in the form of another token, meaning it wasn't comp with Compound. It wasn't, okay? Earn and sell was the first time ever that a company gave you rewards and gave it to you in another token if you wanted to, right? So these are very important principles. These are the foundations of all this DeFi hype and the craziness and all the farming that's going on and so on. Now, again, if you net out all of the costs and you net out all of the hype, Celsius today pays you more than anybody else. Go to Celsius.com, look at the historical average rate. I'm happy for you to compare it to anybody, compare it to anyone out there, and show me that on average, somebody else paid you more than Celsius. After fees, after stability fees, after withdrawal fees, after gas fees, Celsius doesn't charge any fees. So take whatever you think you earned, deduct all those things out, and show me that you earn more than Celsius, okay? On average, over the duration of time that we've existed. So the safest, the easiest thing to do is actually to just deposit your coins or token. We support 32 of them. There isn't anyone in the world that has 32 different coins and tokens like Celsius does. So also, Celsius is the only profitable company in the business. There isn't another company that can raise their hand and say, we are profitable too. No, every one of our competitors is burning cash like crazy. So you think of, who do you want to deposit your money with? You want to deposit, or here it's not your money, it's your coins or tokens. You want to deposit with someone who is acting in your best interest and is profitable, or somebody who's not acting in your best interest and is not profitable. So Celsius recently has raised $20 million, over 20 million, close to 22 million actually, all in, at $120 million pre-money valuation. Now, if you looked at that Cointelegraph article that just came out a few days ago, which said, oh, Larry McCormick said that maybe they have a problem. Larry never called Celsius once to ask a question. Larry is just shooting out of his behind stuff that he doesn't know anything about. So Celsius, besides being profitable, no troubled company raises money at $120 million pre-money valuation, 140 million post-money valuation. No company that is in trouble gets an investment from Tether, the largest investment Tether has ever made in their entire existence. Those things just don't happen when you're in trouble, okay? And believe me, all these people dug through our financials. We're going to announce a few other investors that joined, and they were not just happy, but they wanted to put more. We just don't have capacity anymore. We closed the round. There's no more. The next time we reopen it is going to be at a much higher valuation. But the big news for today is that I promised you 2 exchanges. I said 2 exchanges, big exchanges are launching with Celsius. Actually, the number is 3, not 2. Okay, I'm going to announce one today.
All right, Ali.
All right, yeah, you see, I'm not announcing the other two. I'm just announcing one. So Bitfront, which is a wholly owned subsidiary of Line. Line is a gigantic messenger. They're like WhatsApp. They have several hundred million users. So Line is about 10 times bigger than all of crypto put together. They launched their services with Bitfront in the United States and another service overseas. And they selected, we have a contract with Line. They selected to work with us to offer interest income or rewards. I shouldn't say interest income. We really are offering rewards to their community on all the main coins that they have. And a company like Line, which is a gigantic company, thousands of employees, believe me, went through every detail, everything. They asked us hundreds of questions, okay? Hundreds of questions. We provided documentation and everything else, made representations, legal representations, and so on. And obviously they launched with us. If we had any problem, any issues, there was zero chance that we would land somebody like this. Believe me, BlockFi and every one of our competitors would be dying to get this customer and brag about how they landed the largest guy in crypto to date, okay? The largest player in crypto right now is Line, okay? So more users, more everything than anyone else. You name the biggest guy you think Binance is big. How about 20 times bigger than Binance in number of users that use them every day? So there's a huge endorsement. If Tether wasn't good enough for you, how about Line and Bitfront? Okay, let me drop the mic right here and walk away. You know? or maybe I'll let Lefty Hook tell you how it's going. You know how it's done. So the point is just, Lefty, where are you?
It's a network in which the depositors.
Let's celebrate this moment.
We represent cryptocurrencies, Celsius network, dealt with the experts.
Yes.
How to invest, collect up on the interest. Say your joint Sunday.
While everybody else is fighting Celsius just keep dropping bombs one after the next, right? And all these big guys are choosing us not because we talk a lot, okay, and not because whatever, right? It's because we deliver. We deliver more for more people. We paid more interest than anyone else. We've been around longer than anyone else. We never had a hack. All these guys that are shilling and fudding and BSing you and trying to jump on our Twitter or Telegram channel and scoop you away somewhere else, they all had hacks. They all had scams. They all had liquidated the heck out of you, right? You want to go back there? So find me one person that can say any of those things about Celsius. One person that will say, I got liquidated, I got hacked, I got scammed, right? So we've hired 20 people in the last month, 20 new people we've added into Celsius, and we're adding another 20 in the next month if we find them, right? So we are one of the best companies in crypto, right? Again, over 1.1 billion in coins, profitable, doing better than anyone else. All right, so let's keep going. So again, there's two more large exchanges. The second one is going live, I think, the second week of September. Again, they delayed. They were supposed to go live this month. They had a delay, nothing to do with us. A great exchange, amazing service. You're gonna love it when you see it. And not as big as Line, but definitely an amazing partner of ours that we're really excited about. And then there's a third exchange that should go out in October, which will announce its partnership. And effectively, again, all these guys are going to offer interest income to all their customers overnight, right? So why is that good for you? Let's go through that analysis, right? More users means more deposits. More deposits for Celsius means more loans. We still have plenty of, right now, we have institutions that we cannot fulfill orders for because we don't have enough coins. We already deployed everything. And we're earning, that's why we raised the rates. We're earning everything we can. But if we don't have the Bitcoin, if we don't have the Ethereum to lend out, we cannot fulfill those loans. So adding all of these users, right? And that's part of why also our competitors can't do it, because they can't take on or $500 million of new coins overnight. We can't, right? We have all that demand lined up. So when we have more loans to institutions, right, after we got more users, more deposits, we earn more interest. And it doesn't matter where you are in this flywheel, more interest means more buying of Cell token. Why? 41% of you have asked us to pay them in Cell. So like basically, if I have to go to market and I have to buy that Cell every week. I don't have a choice, right? And you can see big chunks, how we are basically buying bigger and bigger chunks every week. We publish our numbers. You can see all of that. You can see which wallet is buying. You can confirm all the buys. You can verify that all the numbers we give you every week are done. We publish the wallet from which we're doing the buying. You can see all of that, right? So if you don't believe anything I'm saying, grab a friend who knows how to do chain analysis, and they can verify everything I've just said. And if you don't believe me, or if you're saying, hey, I think there's an error here or whatever, just send us a message and we'll show you and confirm to you and verify for you that everything we're saying is true. Okay.
Yeah, Celsians as well. They post every Monday how many of each coin we're buying back, how many Cell tokens, the dollar value of the Cell tokens, in Bitcoin, Ethereum, everything. And they've got all the historical data. So it's 100% available to anyone. Yeah.
And Tony sent me a long email also saying, look, Alex, I know I explained it 3 times, but I still don't understand the Cell model and why it's different than others, right? So I have a great video that talks about that. I think it's like either 2 or 3 AMAs ago. I talk in detail about the Cell token. We're gonna crop that, create a separate video from that, so everybody can go through it. Sometimes maybe you need to listen to it a few times. It is different. Again, no one is doing it today. All these guys who pretend to copy the Celsius model, when you do farming, if you comp and you're doing farming, right? You take the same loans, you take the coins that retail customers gave you, and you lend them to retail. That's not what Celsius does. We don't lend to retail. As a retail user, try to come to us and borrow Bitcoin. You can't do that. Try to borrow Ethereum from Celsius. You cannot do that, right? Why not? Because lending to retail is not a business, okay? That is, I don't even know what that is, but we lend to institutions while all of our competitors lend to retail. So lending to retail, who then redeposits that back on this or that platform again and again and again and again. Do you think that's a good thing? You know, that sounds to me like what some of these banks are doing. And then we're not here, to do any of that. So moving on. So I want to have a special welcome to the 1,022 investors who participated in the Bank to the Future offering. I mean, we are humbled. We're shocked at the reception, at the perseverance. I know, again, Bank to the Future was not ready for you guys, okay? There were over 2,500 people who applied, and they got bombarded with these requests, and they weren't ready. They thought we're going to get 200 or 300 people showing up, right? So again, that's why we reopened it. We re-upped. We started at 15 million. We re-upped this to 17, and then we allowed you to go above that. And then we opened it for another week because so many of you complained, and people were like sending me messages of like, I can't, well, why am I out? You excluded me. This is not fair. They held up my paperwork. Why am I being excluded? So in fairness, even though we closed around, we decided to reopen it. That's the only reason why we did that. All this flooding that you're reading about us, oh, we're desperate, we need money. We raised over 20 million. We have not used any of that money. It's still sitting in the bank, okay? Now ask our competitors, go to BlockFi, who every 6 months raises 30, 50 billion, and ask them, where's that money you just raised? They burned through it because they're subsidizing their rates. They're not really earning it, okay? Celsius still has that full 20 plus all the money we have on top of that. So, again, not just that we're acting in your best interest, but we're also profitable. Do good and then do well. All right, so we talked about the Fed, so I'm not going to cover that. And I know Zach has like 150 questions right there waiting for us. So
whenever you're ready.
Yeah, so if you really have a taste for you know, zombie shrimps or for pasta, you're really hungry, I think you should stick with Celsius, okay? All those things are not gonna end well. They do not generate any real value. When an institution pays me interest, that's real value. I gave them something that they need because they need risk offset, or they need to do market making, or they need to do arbitrage, right? Those are all very clear, simple businesses that anyone can understand, right? The price on Coinbase is different than the price of Binance. They run the coins between them. They sell here, they buy there, and they make the difference. That's what hedge funds do. To do that, they need a lot of coins. They borrow them from us, they pay us interest. Now explain to me how you create value in shrimps or yums or even calm, right? Just explain to me, anyone who thinks they can understand how value is being created there, explain it to me. I'm a pretty smart guy, okay? And I'm telling you, none of that is value, long-term sustainable value. All of that will disappear the minute money stops showing up, fresh new money, right? So the new participants, the new investors will bring new fiat, paying the old guys who were there a little bit ahead of them, okay? And that is not a good thing, okay? So again, you like shrimp, go to a restaurant, buy some in the supermarket, cook them for yourself. Don't go farming for them. We have amazing new rates. If you haven't seen that, US now can earn 6.2%, the same as platinum non-US on Bitcoin. All-time highs for stable coins, 11%. You can now take your dollars or your Canadian dollars or your Australian dollars and buy a stable coin. You can either buy it with ACH through us, or you can go directly to True USD or to Coinbase or to any of the providers that sell these things. We don't sell them. We enable you to buy them from the providers. And then when you put that, when you contribute that or transfer it to Celsius, we earn that yield. We pay you more in kind if you're in the United States, or you can earn in sell if you're outside the United States, as high as 15% per year, right? Now, why is that? Because the demand for these stable coins is at an all-time high because of the farming. You want to make the most money out of farming? Don't farm. Just go put some stable coins, let them work. Let them do all the work for you, all right?
Alex, right now we just cracked an all-time high. We have 500 live viewers right now, 500 live viewers.
Yeah, they're all fans of David, you know, like his that's what this is about. He brought his posse with him, you know. So
there you go.
You know, and probably half of them are girls running after David. Yeah. All right. So all right, I think we're good. Zach, let's hit the questions. I think we covered all the main issues.
All right, we got a lot of great questions here. First one coming from Andrew. Does Celsius take any credit risk? Who are the people that are paying you the high interest, and what happens if they cannot repay their loans?
Right. So two types of borrowers, right? Most of our borrowers, like if you look at, again, we have $1 billion deployed, right? $1 billion deployed. No one else can say that, right? Most of that is institutions. Most of that is large hedge funds who come to us and say, I need Bitcoin, I need Ethereum, here's my collateral, right? So are you taking a credit risk with them? Yes, you do, right? So you have to check their balance sheet. You have to make sure that they're sound. You have to make sure that they have money in the bank and that they're a profitable entity, right? And if you verify all those things, then we decide how much to lend to them. We don't have any institution that I think is a concentrated position. It's not like half of our coins are sitting with one entity, and if they blow up, we're out of business. So the other half of the business is lending to retail. What does it mean? Again, not coins. This is lending dollars. So you come to us, you say, I have one Bitcoin, let's say $10,000. I don't want to sell it, but I want to pay down my credit card, right? I'm paying 24% on my credit card. Celsius, can I borrow $5,000? Yes, you can. You apply in the app. The next day you get either a wire transfer or an ACH into your account. The money shows up in your account. We have $10,000 worth of Bitcoin. You have $5,000 worth of dollars. You go, you pay down your credit card. We sit and watch, our computers sit and watch the price of BTC. And we're using Chainlink, right, for that as one of the oracles. We use other oracles as well. And if the price starts going down, we ask you for additional collateral, right? If you don't give it to us, we always have more than $5,000. Even on March 12th, when Bitcoin dropped 50%, we had more collateral. Most of our loans right now at 25% LTV, not at 50% LTV. So what does it tell you? That we have 75% collateral. Things have to drop 75% for us to start losing money, right? So we have never lost money. We never had to liquidate. Any institutions, they always give us more collateral or return some of the coins that they borrow to basically reduce that exposure. And that's why the risk is minimal. But yes, there is risk. Anyone who tells you there's no risk is lying to you. Next.
Awesome. Okay, Chris asks, you say Celsius is profitable. How much money is Celsius making a month in net profits?
So we are, basically our income is anywhere between 5 and I would say $8 million. That's our total revenues per month. Okay, it depends on what we're doing. And I can tell you that we're spending less than that after we paid interest to our community, and we had all of our costs, including payroll and everything else. How much is left, I'm not going to disclose, but all of our investors who invested with us obviously saw the numbers and said, wow, I need to get a piece of this company. And again, 1,022 of them are people who are watching right now, Celsians, who almost everyone is a Celsian with a Celsius wallet, who said, I have my tokens, I have my coins earning yield, I'm getting the rewards, I also want some of the equity. So I can assure you that BlockFi can say that Crypto.com cannot say that. There isn't a single company that I know that can say that. And if they think they can, great, show us the numbers. We'll be, our audit, we're a UK company, so we will be filing our UK audit in the next 60 to 90 days, and it will be public information. You'll be able to see results through, I think, the end of February. Next.
All right, Kevin asks, is it true that you partnered with Line?
Yeah, so again, the actual exchange name is Bitfront. They're owned by Line, and our agreement is with Line, and we plan to do many more things with them. Again, it's one of the Line just merged with SoftBank. I don't know if you saw it. It's a huge announcement. So Yahoo Japan and Line are merging, and they're all both going to be effectively subsidiary of SoftBank. SoftBank is an amazing company, one of the best investors in the world. So we're very, very excited, and thank you, Line, for choosing us as one of your partners. Again, if you go on our main page on the website, celsius.network, you will see, I think, 15 or 16 different partners. Just go right below the first thing, just scroll a little bit down. You'll see 15 or 16 partners. Find anyone else who has integrated. Most of these guys are integrated through APIs, right? Amazing names there, including Chainlink, including Bitwala, including Voyager and Monarch and a bunch of other people. So this is not like the first time we're doing a partnership. We've been enabling many other wallets, many other providers for the last 2 years. And that's our purpose, right? I mean, what we've said from the beginning is it's not just, oh, Celsius is going to do it all by themselves. We're going to hurt everybody else. We're going to steal their customers. The opposite. We enable all of our partners to provide the same service with the same rates to their customers. And that's what Line is doing. Next.
All right. Alejandro's asking, how is Celsius even capable of paying 15% on stable coins right now?
I love the name, Alejandro. You are right. I mean, we have to earn more, right? So if you want to see what other people are paying, again, CMC has a button there. Go to borrowing. There's a whole section on the CMC side that talks about borrowing, and look at the cost to borrow. stable coins, right? And again, we charge even more. We don't do the average. So right now we're earning anywhere between 16 and 20%, sometimes even more than that. So on average, we can pay what we're paying, right? And it really depends on how much we keep, because at any day somebody can come and ask for withdrawal. So we don't deploy 100%. Like if the pool of stable coins has, I don't know, $200 million, we keep maybe 20 million or 30 million in the pool so everybody can withdraw whatever they need. And then the rest of it goes out and earns yield. And then we pay 80% of what we get back, and that is the yield that is published, right? So the yield, when we say 11%, that is what that pool earned in kind. And when we publish it in sell, obviously we have to go and buy that sell. We buy 100% of that sell from the market, from Liquid, from Uniswap, from all the different sell pools out there. Next question.
All right, Robert is asking, are these new higher rates on BTC and stablecoins sustainable? How long will they last?
I'm gonna let David answer all the questions from now on. That's it. Come on, David. How long are we gonna keep these rates?
Forever.
As long as we earn the yield. Look, if we are not promising these things will last forever. Right now, again, because of the DeFi craze, there's huge demand. People are willing to pay higher rates because in farming, there are crazy situations where you can earn 30, 40, 50%. Go on Twitter, look at all the guys bragging about how they're farming and earning huge rewards. Well, how are they doing it? They borrowing stable coins, and then they're doing all kind of stuff. They're using leverage, right? Well, what does it mean leverage? Somebody lent it to you. Well, who lent it? Well, we are the largest lender on many of these exchanges, right? So when you're borrowing it from your exchange, there's a 50, 60% chance you are borrowing from Celsius. When you're borrowing this from Genesis, there's a good chance you're borrowing it from us, especially if it's a specialized coin. So the point is that we cannot be profitable and subsidize the rates at the same time, right? Those are two, just don't calculate. So if we're subsidizing the rates like BlockFi and others, then we will be losing a lot of money. That's why they're losing a lot of money. We have to earn that. Now, the magic is that we're earning it consistently more than anyone else. That's why we're paying higher rates than anyone else. Now, Celsius started raising rates before everyone. Go to Celsius.com and look at when Celsius started raising rates, right? And you will see we are a leading indicator. We are telling you that this wave of DeFi is coming. We're telling you that alts are going to pop because you can see the lending. When there's a lot of borrowing, what does it mean borrowing? People are going on leverage, right? People are willing to pay more for USDT because they want to buy Bitcoin on leverage. So when you see the rates popping up, that tells you there is a swell going, which usually means higher prices. Now, again, I'm not recommending that you buy or sell or whatever, but we are a leading indicator. So Celsius rates are a leading indicator as to what's happening out there. Next question.
I think that some people don't realize that Celsius is actively hunting for the best yield for the users
and we
all
move
the time.
Coins. That's right. We move coins that are earning less to places where they're earning more, right? So if we gave you a loan at, I don't know, 6 or 7%, and suddenly we're earning 10, we call back that loan and redeploy the coins at a higher rate, right? That's our job. Now the pool, if the pool is 200 million and we redeploy 20 million, it only affects the pool by this much. So it takes a little bit of time for the pool to increase it. So sometimes you'll see a spike and you'll see us moving very slowly because the pool is very large. The Chainlink pool is very small. We just launched the coin recently. We had, I don't know, $10 million worth of Chainlink, I think, or whatever. And it was earning rewards of, I think, 2.5% or something. And then few big loans came in and boom, we had to double the rate. We doubled the rate to 4.5%, right? So when the pool is small or smaller, and then the rates move a lot. When the pool is large, like Bitcoin or Ethereum or stablecoin, it takes many transactions for the rate to increase, and it takes much longer. And again, we usually want to see it sustainable. So we'll wait a week or 2 or 3 at these higher rates, and then say, okay, fine, here, let's raise the rates. So next question.
All right, Matt is asking, with the coins Celsius has put in DeFi, how much would it hurt if a smart contract they were using had a bug and got drained? What is being done to mitigate that risk?
So the best thing to mitigate is to not touch any new contracts, right? Smart contracts, some of them are old and smart, and some of them are young and stupid. So we should call them stupid contracts, not smart contracts, right? YAM is a great example of a stupid contract, right? They had a bug, no one understood it, and eventually it's like the Matrix where the machines won against the humans. The actual consensus mechanism, the machine itself, yum, ate all the yums and did not allow the people who are actually trying to create consensus to change the how the stuff is distributed, and effectively the thing just froze and died on itself. So we don't touch any of that stuff, right? We work with Comp, we work with Maker, we work with Aave. All these guys are very reputable. They've been around for years. And we know their contract. We audited their smart contracts, and we know they're smart. So, and we don't have, I think we don't have more than 2% of our assets in any smart contract. So if Aave went out of business tomorrow because they blew up and everybody lost their assets, we have less than 1%, maybe even less than half of 1% with Aave or with Compound as an example. Compound is probably 1%. So most of our business is lending to institutions, and it will stay that way. And that, again, is something that no one else can say, right? Most of these guys, again, especially the DeFi guys, are lending to retail, which is a much more risky business and much more volatile business. And you can see that when there's a flash crash, you can see, again, I'm not saying it in a bad way. I love Comp, I love Maker. Rune is one of the people I admire the most in this industry. I think is a brilliant guy. But their model is that when there is a lot of stress on Ethereum, for example, they have hundreds of millions of dollars of liquidation. Same thing with Aave and same thing with others. So it's just how it works. So it's not, in our case, it's almost the opposite. When there's a lot of stress on the system, like March 12th, the institutions come running to us and saying, gosh, I need more coins. Can you lend me more instead of liquidating more, right? So when people have margin calls, they liquidate and they pull out assets. In Celsius, when there is a lot of demand, when there's a lot of stress, a lot of volatility, the institutions are coming for more because that's when they're making money, is when there's a gap in pricing. During March 12th, BitMEX, the difference between BitMEX and Coinbase was $800 at 11 p.m. Check me out. 11 p.m. on March 12th, check out those two prices. So if you were an institution and you borrowed coins from Celsius and you sold them on Coinbase, and at the same time you bought them on BitMEX, for every Bitcoin you made $800, right? So wow. On March 12th, institutions ran to us and said, how much Bitcoin do you have? Put it on BitMEX for me right now. You understand? Which is the opposite of what happened on every DeFi platform and every one of those shrimp farms and pasta farms and everywhere else, right? So we have a very different business model. I understand it's hard for people to see, like, Alex, what, you invented your own thing? Yes. And I've done it a few times. I have 50 examples of me inventing the future. Go to Mashinsky.com, look at my patent section, read through all those patents and tell me I did not invent many of the things you're using today. So I'll take the credit for that. Next
okay.
question.
Liam is asking, does Celsius's business model work to support or to suppress the price of Bitcoin?
Excellent question. David, you want to answer that? Come on. You give him a year or two, he's going to be killing me with, he's going to be way ahead of his dad. He's just sitting there quietly, but he's got quite a brain on his
observing, still observing.
Yes.
Yeah, taking everything in.
And he's gonna go to teach those Bucks a few moves, right? When are you starting in Denver? Next year? Yeah, he's taking a gap year, which is a very smart move. Thumbs up on the gap years. Instead of studying from home, he's gonna travel the world and then come back and become a Buck. So Buff?
Not Buff.
I thought it was a Buck. Wait.
Buff.
Okay, just shows you what I know. I'm a college dropout, so We need somebody with a degree in the
Doing all right.
Come on. A buff. All right. We learn something every day. So the answer to the question is that if you are lending to short sellers, then the answer is yes, you are suppressing the price of Bitcoin, meaning we have 326 institutions that are onboarded with Celsius, right? And each one, when they're on board, we look at their charter, we look at what they were created for. Each hedge fund has to tell its investors and the SEC what it's doing for business. You can't just lie, right? So some of them do directional trading, meaning they go long, they go short, and so on. Most of them more focus on arbitrage, market making, and other activities. So the guy that arbitrage, again, arbitrage is I'm going to grab that difference between Coinbase and BitMEX, right? That does not suppress the price of Bitcoin, because even though I'm selling on Coinbase, I'm buying on BitMEX. So all I'm doing is shrinking that gap so the price stays the same across the entire crypto industry, right? So that does not push down the price of Bitcoin. But if you are a short seller, you think, oh, you know, like everybody is dumping their Bitcoin, I'm going to pile on and put even more pressure on Bitcoin. And I'm going to make money because I'm going to sell it at 11,000 and buy it back at 10,500. Then yes, you're putting pressure on Bitcoin. Very few of our participants or hedge funds that we work with are short sellers, because for us, it's a very high risk counterparty, because if you're wrong, you're going to blow out all your capital. So we much rather work with the market makers, with the institutions who just need risk offset or need borrow, right? Similar to SEC lending on Wall Street, then work with the short sellers. Now, some of our competitors work with short sellers, they work with the small exchanges, and you read in Cointelegraph every week about how this and that fund went out of business. I can assure you none of those were our customers, okay? So we deal with the highest quality institutions, the largest guys. Some of these guys have billion-dollar balance sheets, and they got to have billion-dollar balance sheets by not taking these crazy risks like naked short or just leverage short, where you go 10-to-1 leverage and you just dump Bitcoin hoping the price is going to go down. So, and because of that, Celsius has never had a loss. We never had an institution that didn't pass back, didn't pay the interest, didn't return the coins or anything like that. Ask, if you want to give your coins to someone who's not Celsius, have them in writing. I'm happy to give it to you in writing, that we never had an event. Ask them in writing to give you that, okay? Because then they'll have a legal liability of lying to you. So even if you give them the coins, just get that piece of paper. Believe me, if something goes wrong, you'll have a much better legal position showing that they lied to you, and because of that, you gave them this or that coin. So again, not legal advice, not financial advice. I'm just sharing with you what we do and why we're acting in your best interest. And I can say that, acting in your best interest, always. We have more assets than loan, always, right? Again, ask these institutions to tell you these things. If they can't tell it to you, they cannot put it in writing, then they are lying to you, right? Something is wrong. And all this flooding that's going on is because we're stealing so many customers from these other guys who are not paying you anything. So if you are this or that provider or wallet or exchange, and Celsius keeps stealing customers from you, we stole $1.1 billion worth of customers and coins from others. Do you think they're going to be happy? Do you think they're just going to sit there and not say anything? Or do you think they're going to be flooding us all day long? So, of course, there's pressure on these guys. Their bosses are screaming at them. What the heck is going on? You know, what can you do? Shut down these guys. Find a way to shut down Celsius. They're giving too much to the customer.
You're acting too much in the interest of the user, Alex. You better stop, or it's going to become something massive.
Pun intended right there with that interest.
Okay, next question here. Ricardo asks, I've been reading about Celsius rehypothecating assets. Is Celsius lending out the same coins multiple times?
Yeah, excellent question, Ricardo. And the word rehypothecation is sounds very complicated. Sounds like only if you are a rocket scientist, you can understand what rehypothecation means. Go look it up. It's actually a very simple thing, right? That now, it is true that today on Wall Street, no one really knows who owns what, because all these assets that companies and banks and financial institutions have been lent out or rehypothecated many, many times. The same stock certificate or the same bond or the same legal contract that may be a derivative or something else have been lent out again and again and again and again. Okay.
Yeah, there was there was a Dole Foods case where there were more holders of Dole shares than there were actual shares. And that's
right. And that's called, people were doing naked shorting, meaning they were selling shares they didn't even have. And effectively they created fake shares by selling shares that don't exist, right? Or rehypothecated the same share again and again and again. And when you counted all the shares, there were more shares than actually were issued by the company. So that happens a lot on Wall Street. But it cannot happen on the blockchain. Why? On the blockchain, when we do a loan, we actually transfer the keys to someone. And you cannot take the same keys and move them several times with the coins still staying with you, or the tokens. You move the keys, the coins move with it. The ownership of the keys. The blockchain as a whole knows exactly where all the coins or tokens are. That is the beauty of the blockchain. That's why many financial institutions are saying we want to move to the blockchain to avoid the multiple spend problem that they have today. And this is a problem in the trillions. This is not like a little problem, right? Derivatives are things that are 100 times bigger than the entire stock market, right? The amount of issued derivatives, and those things are being rehypothecated. And again, the market that blew up, the market that had a problem in November, first in September, and then again in November of 2019, was the repo market, right? What does it mean, repo? Repurchase market, where institutions lend to each other, rehypothecate to each other, right? And repurchase those loans later on. They basically run and say, I don't have enough cash, here are my assets, right? Take these bonds, notes, stocks that I have, but they're not really theirs, right? It's somebody's else. It's rehypothecated, and in turn, they get dollars. And when the market freezes, that means that the lender, in that case, JP Morgan or Citi, the big banks, right? The top banks in the world say, I don't trust you. Something's going on. I'm not lending you dollars. I don't want your collateral. And that's where the Fed stepped in and said, okay, you guys don't trust each other. I will stand in the middle. Lend to me. I will take everything. I will lend you against it. And guess what? You needed to have 10% in assets. You could lend fractional reserve 90% and keep 10%. Now you have zero requirements. You do not, banks do not need any collateral. Now again, all this sounds complicated and this and that, but it tells you it's a shit show. That's all you need to know. It's a shit show in the trillions of dollars. 270 trillion with a T, 12 zeros, right? Trillions of 270 trillion dollars that no one knows who owns what. Okay, none of that exists in crypto. Moving on.
Okay, a lot of people in the chat are asking, will we be supporting the XRP Flare airdrop swap?
I'm working on it. I understand there's an issue there. I understand a lot of people want it, so we'll make it happen. Next.
All right. Next question is coming from Ash. They're asking, do you offer custodial services to crypto hedge funds?
We are not a custodian. We offer corporate accounts, and if you're an institution or if you're a hedge fund and you want to earn rewards with Celsius, you're welcome to come open a corporate account. We onboard you, we do KYC, AML, and then you can earn yield from Celsius. We have hundreds of such users already, and we're happy to add more, but we are not a custodian.
Awesome.
We use custodians.
Okay. Right.
We have partnership with custodians all over the world. We work with on-chain in Singapore. We work with a few European custodians. We announced many of them So if you want to work with them, you can do that as well. If you're saying, no, I don't want to lend to Celsius, you can go to on-chain in Singapore and give them your coins. They'll pay you rewards just like we do. And then you're working with a custodian. So if your charter does not allow you to lend to non-accredited financial institution or whatever you want to call it, then we have plenty of partners. Like for example, in Germany, we work with Bitwala, which is partnered with Solaris Bank, which is the actual licensed institution. So in each geography, we have licensed partners. Some of our customers decide to work directly with us. Some decide to work through these. Again, the rates are the same. You don't pay more because you went to Bitwala, or you earn less in rewards, right? So the yield is the same. The rewards are the same. You just have to decide who you're happy with. Again, you can work with Bitfront. Go download the wallet, deposit with Bitfront, and you will get exactly the same treatment as if you downloaded the Celsius wallet. We love you either way, right? If you and you don't have to stand in line. You can just go straight to the front. No, that was a dead joke right there. So
yeah, one of many.
Yes.
Okay. Tony's asking, there is a major banking issue in the medical marijuana industry. Is Celsius able to help with this problem in partnership with companies in the field?
So that's a federal law issue that's unresolved. We are not a bank. We cannot really step in and solve that problem. I understand the issues, and that a lot of companies are basically saying, what the heck going on here? If I'm in Colorado, I can't take this money that I earn and deposit it in a bank. Makes no sense whatsoever, right? Even though the service is legal. Currently, we cannot offer any solutions over there. Next question.
All right. Stewie is asking, will you be adding Chainlink and the other new coins as collateral options to borrow against?
Yes, I apologize. I did not realize that there were not. I mean, I just learned about it right at the beginning of right before the AMA. My team told me that they're not. That is an oversight on our part. We made a mistake. All coins in the Celsius wallet, you can borrow against. Somebody forgot to click one of the buttons and enable that. So
click the button. Just click the button.
Exactly. Click the button. So I know it's Friday, but I'll try to get it done before the end of the day today. Next.
All right. Can you please explain how the team token distributions at $1.50 and $3 will work? Will there be a lockup?
Yeah, so that's a great question. So imagine this, right? You want to join a company, right? Like Coinbase, or you want to join a company like Microsoft, and they go and they tell you, look, we put $37.5 million and another $75 million in a pool that you can get if you do well after you do good, right? You join the team, you do good, right? And when the cell token hits $1.50, you're gonna get basically half of it. And when the cell token hits $3 for 30 days, you're gonna get another half of it. How big of a motivator is that to do
Huge.
well and do good, right?
Huge.
And that's why for every job opening we have, hundreds of people apply and beg to come in, because it's not about the salary you're earning, right? There's literally a pile of gold sitting there waiting for you. And all you have to do is do what we do every day, which is just accept tokens and coins, earn rewards, and give most of it back to our community. That's not hard. Believe me, the hard part is to steal from your customers every day. Banks have to work super hard, right? Stealing more and more, Wells Fargo, creating fake bank accounts, getting billions in penalties because of that. Like, that is hard. Coming up with that idea of creating a fake account for you and charging you $20 a month. I'm a Wells Fargo customer.
They made their employees open a certain amount of
Yeah.
accounts every day.
They told you if you don't open 8 accounts every day, you're gonna be fired. We do the opposite of that. We go to work every day and we try to figure out how do we earn even more for every one of our customers. And obviously when we earn more for you, we also earn more for us. We are getting 20% of it. So the model is just a much better model. And that pile of gold, sell gold, right, sell token, is there as a huge carrot for everybody to say, hey, you do the best you can, be part of the team, be a team player, and we're all gonna get there, right? Because we have I think an 86% hollow ratio. What does it mean hollow ratio? 86% of the people who every week we buy sell token and we give it to the community, right? 41% of the community says, give me sell token. 86 or 87% of those people say, I'm not selling it, I'm sitting on it. And again, you don't have to trust me. Look at the smart contract. You can see the deposits and look at the withdrawals and do the math. So what that tells you is that we're going to get there pretty quickly, right? Because if we have more deposits and we have more coins coming in, we have more users, we have more interest earned, we have more sell token, and we have to buy more and more and more, and most of those people don't sell it, you're going to get to the $1.50, you're going to get to the $3. Now, yes, employees, when they get to that $1.50, they have college loans, they want to get married, they want to buy a car. Yes, they're going to sell some of it, but by that time, we should have, I don't know, 5-10 times more customers, right? So the amount we're going to be buying is also dramatically higher, which means that even though they're selling, they have to pay taxes. There's a lot of issues, right? But you can be assured that they are not going to crash the sell token. Also, the price has to be at $1.50 for 10 days. It has to be at $3 for 30 days, right? And we set all that up back in 2017. Now, we didn't just invent that 5 minutes ago when the sell token started going up. Look at our white paper, look at the smart contract. All of that was set up from the beginning to make sure that everybody who joins us is on the same bus, focused on the same things, acting in the best interest of our community. And most projects didn't do that. Most projects are shilling and then dumping on you as they're shilling, right? And even right now, what do you think is happening with comp? Do you think the VCs that own that comp token, do you think they're sitting on it, or do you think they're dumping it? So now again, I'm not saying it's a bad project. I'm just telling you have to watch. Don't listen to what they say. Watch what they do. Follow the coins. Next question.
All right. Mohammed is asking, is rehypothecation the same as fractional reserve lending?
Yeah, it's a great question. Look, a fractional reserve is a very difficult thing. You really have to understand it. It's an invention. Somebody should get a Nobel Prize for that, and not in a good way, right? Nobel became rich from selling dynamite, right? So it's an explosive idea that here we're talking about. The fractional reserves is the legal right that banks have to print new money or create new money out of thin air, right? I have some slides about it in my presentations if you want to look at it, but it's a complicated idea. But really all it does, it gives banks the leverage they need to be able to make money. So they can loan out much more than they have in actual deposits, right? Rehypothecation is something completely different. Rehypothecation, all it means is that when you receive something, you can lend it out. Now, if you got $100 worth of Bitcoin, you cannot lend more than $100, right? You have keys for $100. The maximum you can do is lend out those keys. You cannot take the key again and give it to someone else. That's the whole purpose of the blockchain, right? You cannot take the same Bitcoin and lend it to 5 different people. So rehypothecation is all about lending. It's just the same word as lending, right? And on Wall Street, you can only do it once, versus fractional reserve is creating more and more and more of the same, creating leverage, right? By lending more and more and more. They don't actually print. They don't want to go to a printer and print money. All they do is go to their ledger, they go to their Excel spreadsheet and say, I borrowed this and I'm lending twice as much or 4 times as much. The Federal Reserve or the FDIC allows you to lend up to 10 times more. In some other countries, you can lend up to 50 times more, 50 times. You have $100, you can lend $5,000. You cannot do that in crypto. So huge difference between rehypothecation and fractional reserves. Next question.
All right, John is asking, what roadblocks have regulators placed to prevent U.S. investors from earning rewards on Tether Gold? Do you have any idea if these restrictions will be removed?
Yeah, so we are also adding, any day, we're adding Pax Gold. I don't think there are any restrictions on Pax Gold. So I don't know the exact details of what is restricted and why. You have to ask Tether. We follow whatever the token or the coin issuer follows. So they tell us which geographies we're allowed to operate. We follow the same thing. So this is not something that we decided. We don't block it here or there. Well, we do block it here or there based on what they tell us. But the point is that based on your geography, that's why we, even though Tether invested in us, we're gonna have 5, 6, maybe 10 different gold tokens in the wallet, and you can choose the one you like the most. So if you prefer to have Pax Gold, which should be in the wallet by next week, the yield is the same, and the asset is pretty much the same. So I can check into the details. I don't know the details right now, but yes, it is blocked for some jurisdictions.
Okay, awesome. Jojo's asking, would Celsius consider offering an Acorns type service, linking a bank card and then rounding up everyday purchases into crypto?
I love the Acorn idea, but I hate the idea of spending money. So think about it this way. Everybody out there, without exception, thousands and thousands of credit card issuers, all focus on one thing: how to get you to spend more than you make. Every one of them, without exception. Every bank, every credit card issuer, every financial institution, every app, they all make money when you spend money. Celsius doesn't make any money when you spend money. We charge you nothing when you buy something, when you sell something, when you convert from this to that. And you know, like, there's a very good reason for that, because if we did, then we would be incentivizing all of our employees to try to sell you all those things. So the only thing we focused on is how to get you to save more, which is no one else is focused on. Right? We invented this category. Interest income is something in crypto, in stable coins, in digital asset, is something Celsius created, right? So like I said before, right? So, and we contributed that to the DeFi movement. We contributed interest income. We contributed earning in kind and earning in token, right? No one had done that before. And if you, again, you want to prove me wrong, show me anyone who's done this before Celsius, right? So that's our contribution to the innovation, to the development of the industry. It doesn't matter if it's CeFi or DeFi or it's a flower. Call it whatever you want. The point is that you can now earn yield and you can have compounding interest on top of it. And when you earn enough, then you should be spending. You should be spending from your earnings, not. So this long story is to tell you that our focus is not to find even more sophisticated ways of getting you to spend. Because when you think in your head, oh, I'm going to earn some acorns, then you spend what you don't have. And that's how you get into trouble. And you pay 24% of it. Now, if you were spending what you earned, you're paying zero on that. There's no interest on the money you earn. So what we're trying to do is graduate all of you guys to financial freedom and to retirement. And you should start at his age, not at my age. You should start saving. So by the time you're 30 or 35, you're financially independent. What does it mean financially independent? Your earnings, your income, especially when we're paying you 11 or 15% on stable coins or all these high rates, your income is greater than your expenses. And when you're spending against that income, not against borrowing from the future. When you spend on your credit card, you're borrowing from the future. You're reaching out to the bank, grabbing somebody else's dollar, spending it now, and the bank says, got you. You're never going to pay that back. I'm just going to charge you 24% for the rest of your life. So which plan is better? right? Now, our plan is horrible for the banks. They hate that. Every bank hates me. I thought I was hated by the phone companies. Believe me, the banks hate me even more, you know? So we are destroying their business of stealing from you every day, from creating fake accounts and charging you fees and withdrawal fees and ATM fees and late fee and you name it, overdraft fee. And on top of that, charging you 24%. That's why you don't have any money. And that's why you overdraft in the first place. And you can't pay your rent and you this, and you can't get your kids through college. That's what all of us are going through. I went through that. It's not like I was born with millions of dollars in my pocket, you know? So all that stuff is stuff that you need to think hard and say, I just need to change my behavior. Just like you need to quit smoking, which is very hard. You need to, this is like smoking. It's the same thing. You're just smoking their BS. Next question.
I think about purchases differently now with such high interest, 8, 9, 10%.
Exactly.
Do I want this? Do I want to spend this dollar now, or do I want this dollar to work for me for the rest of my life?
Exactly. And when you sleep, the beauty is when you sleep, it works for you. And when you wake up and when you have enough income to pay all your bills, you look at your job differently because you decide, you can decide, I don't want to work this job. I hate my boss. I'm going to go and do something completely different, even if it pays less. You have that power. And your life turns completely, it's a different life. You're going to be so much happier with yourself, with your family, with everything else. So that journey is a difficult journey. It's not an easy journey because we, the United States of America, is a credit society. There is 1.7 trillion worth of outstanding credit card debt that pays 24% on average. 24.7% average in the United States. Crazy. Any of you earn even 1% of your money? How come you're paying 24%? So save everything you can, pay down that credit card debt, start saving and spend your interest income. Don't spend the dollars you don't have. Next.
All right. Andy's asking, hey, Alex, can you elaborate a bit on how Celsius manages to lend to institutions at these high rates? Why don't these institutions borrow from banks directly? Yeah,
so try any one of you, okay? Try to go to any of the top banks, walk in and say, here is my Bitcoin, can I get a loan? Here is my Ethereum, can I get a loan?
Nope.
Here is my Bitcoin, I want to get a mortgage. Can you count the Bitcoin against my assets? They'll laugh at you. They'll kick you out of the bank. They'll be like, "What do you? Why don't you bring me monopoly money and ask me to lend you against your monopoly money?" For them, it's the same thing. So the problem the reason there's such a gap, I agree with you. In theory, the price of borrowing in the crypto sphere should be the same as the price of borrowing on Main Street. And on Main Street, companies like Apple pay less than 2% per year in interest to borrow money from all of us, right? They issue bonds. They issued 40-year bond at less than 2%. That's crazy. That's just lunacy, right? You can't get any of that in crypto. So in crypto, the hedge funds, everybody else has to pay market rates. Now, markets it used to be 6-7%. Right now, they're abnormally high. I can tell you for sure that these rates will not last long, okay? But right now, good thing is happening. Why? The rates are so high. A lot of guys who normally trade on Robinhood or whatever are looking at this and saying, wow, this farming thing looks really good. And they are joining the crypto community. So it's all good, right? What we don't want to happen is we don't want them to get burned out, right? We don't want them to lose money on shrimps or pasta, whatever, and leave crypto forever. We want them to go to the more stable stuff. And as they transition there, their rates will come down because there's going to be less and less demand for these crazy rates. So that is what I'm hoping for. But if any of these crazy projects blows up and people lose $100, $200 million, two very bad things are going to happen. One, the regulators are going to jump and lock this thing down, which is not good for any of us. And two, we're going to lose tens of thousands of newbies who, like, what's the name of that guy that bought, right? He was with the Winklevoss twins, the trading, remember?
Oh, Dave Portnoy.
Yeah, Dave, right? He bought chain link at the top and the next day it was down 25%. You don't want that, right? You don't want that to happen. So all I'm saying is what Celsius does is sustainable, even if the rates spike. And when with the rate spike, we have to give you more. Otherwise, we're stealing from you. If I'm earning 18%, I'm paying you 8.6. I'm stealing from you. And that's what the rate was. I had to look at my team and say, look, we can't not pay that. And we may have to raise it again. Right now, the rates are crazy. Now, I don't know. I mean, you know, there are people on my team who are saying it's sustainable. You got to keep raising the rates. Okay. And it will go up and then it will go down. But the point is that you have to decide. Do you want to not sleep at night, press the button 24 hours a day, 7 days a week? That's what you have to do. You have to be on every smart contract all day long as you farming from one chain to another chain, from one smart contract to another smart contract, and the game is over in about a few hours. You got to go to the next game, right? You can do all of that, or you can just deposit with Celsius and know that you're getting 80% of the best, right? As a combination of institutional lending and farming, right? I call it sustainable farming. You want to do sustainable farming, or you want to be shrimp zombie farming? You tell me what you like better.
Okay.
And most people are like shrimp zombie farming. What is he talking about? Google.
Yeah, I don't think anyone's ever heard of that before. That's another thing you created.
No, I didn't. This is for real. It's happening.
Yeah.
Zombie
All
shrimp
right,
farming.
Otis is asking, Alex, you have about 268 million cell tokens in the app. How do you earn yield on those tokens?
Great question. Otis always have piercing questions. He's not shy. He's a top 100 guy. You know, one of our best supporters. I'm very happy for him. I think we made him. We added him to the 1%. But I'm saying that he's one of those guys in the community who believed in it from the beginning and poof became. I'm talking about 1%, like part of the 1% in the United States, not part of the 1% in Celsius. So very happy for you, Otis. That we do several things. So first, we issue loans, right? As of a few months ago, you can take loans against crypto, against Cell. We earn yield on that. We also, Cell is being used for market making. So when you go on Uniswap, for example, Cell token is being used to be a market making against ETH, against USDC, against other pools. That generates yield. That creates income, right? And like I said before, any excess, like when we make more money than we supposed to get, and we have excess, we use that to buy Cell. So effectively, we're using Cell as effectively a thermometer where we buy more or less with any excess. Sometimes if we don't have enough, we use Cell itself, like we use Cell from Treasury, like we did, I don't know, 6 or 8 months ago, 9 months ago, I don't remember when, but we published that every time we used it from Treasury. Sometimes we buy from the market and put it back in Treasury, right? So we act as, you know, if you compare that to the Federal Reserve, that's what the Federal Reserve is supposed to do. And they did it for a very short period of time when they started to suck in $50 billion a month worth of QE from the market, and the market just threw a tantrum and they had to stop. But in the Cell community, we are acting as if we are the Federal Reserve. Now, again, they're not federal and they're not a reserve, but we are trying to actually perform the function of central reserve or central bank, the way the central bank should be doing what they're supposed to be doing. Again, if you want to learn more about it, look at Austrian economics and the purpose of a central bank under the Austrian economics theory instead of the modern monetary theory, which is MMT, which is not, that is just a joke. It's not modern and it's not a theory. It's a disaster. So, you know, whoever invented that should be arrested. Next question.
Instead of a gold-backed central bank, we have a Cell-backed central bank.
Single-handedly going to blow up the entire economy on this planet.
Yeah, Yeesh. All right, another great question from Otis. How much would the rate be on a 1-to-1 stablecoin loan? I want to borrow USD against my USDC?
We're working on that. We don't have it enabled yet. So we're working on figuring out how to do it. Again, we have 1 million requests. We try to get as many features out as possible. And this is one of those things that's waiting. Again, we ran a bunch of surveys on Telegram and Twitter asking you guys what you want. And what comes out as the highest ranking request, meaning more people want it, gets a priority. This one did not have a high priority, so it will not be issued soon.
All right, next question from Martin. Having great partnerships with Bitwala and now Line, many users use these platforms to earn in kind. Will Cell Token see any benefit from these partnerships?
Yeah, so what we get is more users and more assets to lend out, right? Like I said, we don't have enough assets. So the problem you have is when you have a large institution that comes to you and says, I need $50 million worth of Bitcoin, and you only give them 30 million, is it that then they go to somebody else and get that 20 million from somebody else? So somebody else who's not acting in your best interest, somebody else who keeps all of that income to themselves. So we want to fulfill all of those orders. And to do that, we need to have more coins. To have more coins, we need partners. We can't do everything ourselves. And that's why we partnered with Bitwala, with Line, with all these institutions that I think are exceptional, the best quality guys out there. And again, their choosing us is a huge endorsement for Celsius. So when you see all the funding, help me out and just answer all these guys. Just tell them, look, troubled companies don't raise money at $120 million valuation. Troubled companies do not sign up people like Line and others, and they definitely don't get Tether as an anchor investor. Okay, so it's important because I can spend all my time jumping on Twitter and try to educate people about these fudders, but when you hear the same message 15 times, sometimes you start believing it. And it's important that people understand, like there was one guy on Twitter that asked, what do you guys, what is the experience with Celsius? 72 people responded to him saying, amazing, we love it.
Strong on that one.
Okay. There were only 15 love, hearts, but there were 70 something messages responding to this guy, right? That's the strength of the Celsius community. You can't fake that. You can't fabricate that, right? So I need your help. Look, we are definitely hurting some very, very large guys, right? And they just decided to stop playing nice. I'll give you a few examples. Some of you wanted me to do another interview with Pump, right? There is zero chance that that's going to happen, right? Some of you wanted me to do an interview with McCormick, right? David McCormick, or with what do you think? Why all these people would not interview Alex Mashinsky or Celsius, right? Because they all got bought. They all got money from one of our competitors, not to name names, but you can guess who that is, not to talk to Celsius. So I'm calling on all of you to basically stop following these people. If somebody can be bought so easily, and stop telling the truth, stop telling everybody where is the best place to earn yield, which company is acting in the best interest of the community, then why are you following them? You think they're going to tell you the truth about other stuff? So enough is enough, right? They want to play hardball. Let's play hardball, okay? When they're going to see their membership drop by 50%, then they'll change their ways. But right now, there's a lot of players in the industry who are just being bought not to play. And look, these are deep pockets. We're talking about some of the largest guys in crypto, basically saying we got to shut down these guys. They're getting way too big, right? They have billions in assets. They're giving so much back to the community. That is not something we want, right? We want to go public and make our investors rich, right? Next question.
All right. Randy is asking, why do institutions borrow stable coins at such high rates when they can buy them without the volatility risk?
Yeah, so for it's not that they're borrowing stable coins, right? Most of the borrow, again, for us, 80% of the borrow, if we have 200 million in stable coins, 80% of the borrow, 800 million, is in Bitcoin, Ethereum, Litecoin, Bitcoin Cash, and so on, right? So the people that are borrowing the stable coins are mostly retail who wants dollars against their Bitcoin, right? I give you my Bitcoin, give me a loan in stable coin. Or I want to buy more Bitcoin, so here's my Bitcoin, I will take a loan and I will buy more Bitcoin with the stable coin. That's why they want USDT or they want DAI because they want to go farming, right? So the institution normally will not borrow stable coins, right? They can, like you said, they can go and buy them themselves.
Okay. Last two questions here. First one is from Ray. Are there any plans to incentivize or empower community developed apps that go into conjunction with Celsius?
Yes, so again, every one of you who wants to do that is invited. We have several of these, like what is it? The Fox. What is the name of the apps?
Digifox.
Digifox is a great example, right? Of a community member who said, "I'm building something. I want to plug in Celsius. Here's my APIs," and they launched and went live, right? And they're solving this or that problem. Or Monarch, for example, Monarch is providing many services Celsius doesn't. And there are a lot of people who prefer to use that app, or Bitwala, right? Bitwala does things that Celsius doesn't do. So we're not trying to solve all the problems. We're trying to be the best at interest income. And we want to enable as many partners as possible, including your wallet that you create that may solve whatever, that maybe do Acorns or may do something else, right? You go ahead and do it. Last question.
Very cool. Okay, last question. Kim is asking, will there be any further opportunities to buy equity in Celsius?
Sorry, my phone decided. Yes.
Nipsey Hussle came through again. Kim asked, any further opportunities to buy equity in the company down the road?
Right now, the round is closed. We will hopefully reopen it. And later on, it's going to be at a higher valuation, but we've gave people plenty of time, right? I mean, people say, "Oh, Celsius rushed to raise money." We didn't rush to raise money.
Over
we
2
did
months.
6 months of due diligence with Tether. 6 months of due diligence, answering all their questions. Months and months of due diligence with Line. So. And we then open it to the community, to the crypto community. You don't just walk in to Bank to the Future and say, "Oh, I'm desperate. I have all these problems. Can I raise money on your platform at a very high valuation?" Right? The Bank to the Future saw that Tether did the deal, and they said, "Good enough. That's a great sponsor. But now let's do a lot of checkups. Let's do a lot of homework." And then takes months. You have to register this with the SEC. You have to register with other regulators. We filed 288-page document with the FCA, with the UK regulators, right? So all these things are things that you don't do if you are desperate, or if you're running away, or if you're whatever, right? So, guys, thank you very much. You're the best. We're doing this all for you. And if you're not sure about Celsius, just listen to Left the Hooks and tell me what you think.
Cryptocurrencies, Celsius Network, come dealt with the experts, show you how to invest.
All right, thank you, everyone.
Join Sunday, you get it every Monday. Store up what you own, or maybe go for loans. Purchase what you need, not that worthlessness of fiat.